Well, is it better to be a stock trader or a stock investor? There's a lot of things that you need to think about. The answer is different for everyone. I will explain how that works, plus do my regular weekly market analysis. We've had good strength in the market. Is it likely to continue? Or are we due for another wave in the correction? Plus, we'll look at the day trade of the week on NVTA. All right, so stock trading or stock investing, what is better? Well, at the base, the most important thing to keep in mind is that it's always best to trade with the trend. And so if the market is in a downward trend, like we've had for the last number of months, then investing over that time period is going to be difficult, obviously. In that same time period, there have been days or even weeks when the market has moved up. So for a short-term trader, in the context of a long-term downward trend, there have been periods when short-term trading has worked quite well because the trend has helped. But there's more to answering this question than just that. You see, trading is a skill. It takes time to learn, whereas investing, you can simply put money into the market over time on a regular basis, and in the long term, you're going to do well. It's been the best performing asset class over the long term. So, if you're looking out 20, 30 years, there's never going to be anything wrong with investing in the stock market, at least if the last 100 years are a guide. But if you are a trader, well, now that takes a little bit of skill. You're turning your capital over more often. You're in and out. A day trader might turn their capital over a couple times a day if they're active enough. And so when you're turning your capital over, you can extract a lot of return. However, if you don't know what you're doing, you can also really, have a bad performance very quickly. There's been many people who have sought to become day traders and go broke in a month because they don't know what they're doing. And that's one of the problems, is that there's no barrier to entry into investing or trading. You open up a brokerage account, put some money in it, and away you go. So what I recommend is that if you don't know anything about the market, then be a passive long-term investor, at least to start. And then start a journey of learning how the market works, how to trade effectively, and slowly start to trade. Because if you can be good at it, you can have great returns regardless of what the market is doing. The market hasn't been moving up for the last, say, half a year, but there's been some great day trading action because there's still stocks that trade very actively. Every week here in this video, I do a day trade of the week, and there's always something, almost every day. Well, in fact, every day that I can remember, there's been something to trade, even though the market hasn't been very good. However, if you don't know how to do that, if you are, new to trading, you read some Day Trading for Dummies book, well, you're probably going to get beat up in this kind of a market. A day trader can do well in a hot market. It's pretty easy. Any monkey can do that. But when the market turns and it's not working for you, that's when the skill really comes out. And if you don't have that skill, I recommend you stay away from day trading or swing trading, because you can really hurt your performance very quickly. All right, let's get into this week's market analysis and take a look at the markets as we do every week. And we're going to start off with the S&P 500 Index ETF, SPY. And we can start a line at the top and drop it down to cut across the tops of that weekly downward trend line. You can see we've got 1 point, 2 point, and we're now at the third point. As a general rule, when you rally into resistance, you get stuck at resistance. And so it's likely that in the short term, we're going to see the market pull back from this resistance level at the downward trend line. Now, I haven't seen any sign of weakness yet, so there's no breakdown, but that's what's likely to happen in the near term. Now let's take a look at the intraday chart. We'll look at the 60-minute chart going back a month. And here you can see a nice long-term upward trend. I can draw a line across those bottoms. See how perfectly that works? I started at the low, cut it across this inflection point, which is where price stopped going down and started going up, and then it touched it here again, and it's running away again. It's quite likely, because we're at that long-term downward trend line, that we'll see a bit of a reversal this week and perhaps break down and start a little bit of a pullback. Now, again, there's no sign of weakness yet. I'm just telling you what's likely to happen. And I think a reason for it to happen will come out as I get into this video when we talk about interest rates. So stay tuned for that. Let's take a look at the Canadian market. Symbol T.XIU is what I like to use. And we'll look at the 3-year weekly chart here first. Similar situation to that of the S&P. You've got this downward trend line, but in this case, you actually have broken through it. However, we didn't go down as much on the Canadian market because oil has kind of insulated the Canadian market from this weakness. So we've broken that trend line. We did stall there for 1 week. I think the Canadian market may come up into this zone right here, not a whole lot higher, maybe 2 or 3% higher, and then stall a little bit. We'll see if that happens next week. Let's take a look at the short-term chart. And again, the 1 month, 60-minute chart. And another concept that's real important to remember is when price runs away from the trend line. So I've drawn that trend line, and you can see that we're a little bit above the trend line, kind of like we were here. When that happens, usually come back down to the trend line. And so we could go up a little bit more and then work our way back to it. Trend is still up. Time frame on the short-term time frame is good. The longer-term time frame, not as solid, but reasonably good still. Now let's jump to commodities because, of course, commodities have a big influence on the Canadian market. We'll take a look at GLD first, which is the ETF that represents gold. And you can see that in the last couple of weeks, gold has been moving up. But let's get the context of that move in the 3-year time frame. And there we can see that this downward trend line is just being tested. You're really coming back into this long sideways range, which is going to provide a lot of resistance. So I think gold could come up a little bit more and then stall in here and go sideways. It's kind of a neutral chart. Doesn't look particularly strong, doesn't look particularly weak. It's just kind of trying to hold the support level that it managed to bounce off of from early in 2021. All right, let's jump over to oil. USO is what I like to take a look at, USO. And there you can see some falling tops on the daily chart, holding support here. So it's a little bit of a negative chart. You can see the sentiment stock score has fallen a lot from where it was early in June as oil prices have pulled back. But let's get the context on the 3-year chart. Because on the 3-year chart, we still have this long-term upward trend line that is in place. Now we can fall a long way until we break that trend line. And it may very well be that that's where we are headed. And so we could see a couple more months of weakness in oil. But it's always helpful to take a look at that shorter term chart. Here's the 1 month, 60-minute chart. And you can see that we've got good support down here. We're above it. We could, we see a little bit of a falling top building. If we come down into there and then break down, that'll probably take us back down to that long-term upward trend line in oil. So I don't really feel like it's time to step in and buy oil stocks yet again. But if you're a long-term investor, you've got positions that you've had for a couple of years, let's say, I don't really see a reason to panic either. I think you're just seeing a little bit of a rest period for the oil stocks as oil comes back to that long-term upward trend line. All right, let's jump over to the chart for the US dollar, UUP. And you can see there we've had a little bit of weakness the last little few days or so, couple weeks. And that's probably why gold has stabilized a little bit. Let's take a look at the 3-year chart for the US dollar. And you can see that the upward trend is still intact. There's your upward trend line. We went parabolic, and I think we're trying to work our way back. We may just hold this steeper upward trend line. You can see we bounced off of that this week. The scores are still quite good. But if we break that upward trend line, then I think we may work our way down to the longer term upward trend line. So kind of a similar situation to oil. Now, what about cryptocurrencies? I know many of you are interested in that. So let's take a look at GBTC. And there's been some volatility. We had a little bit of action in some of the crypto miners last week for day trading. But generally speaking, when you look at this longer term chart, you see that's really just stuck in a sideways range. There's not really a lot of excitement here. The stock scores aren't that great yet. They are starting to get a little better as we are starting to build some rising bottoms. But until you see real volume coming back, breaking through some resistance, I wouldn't get too optimistic. Now let us take a look at the short-term chart because there has been some volatility, a little bit of optimism building. You can see optimism building in the very short term. So that's good. And I think if you're a day trader, some of those crypto miners have presented opportunities in the last week or two because that optimism is building. But I wouldn't be taking long-term positions yet. In and out within a day or two, that kind of thing has been working okay. The long-term stuff, not so much. All right, now the final chart I want to look at is that chart I talked about earlier, and that is the chart for interest rates. And this, I think, could be a catalyst for the stock market to pull back in the next little while, given that it's run up to that downward trend line, and given what happened on the interest rate front last week. You see this spike here on Thursday. We broke this little downward trend line. We jumped up. So this is not interest rates, it's an inverse ETF for the bond market, but if this goes up, interest rates are going up. Now volume is quite light. You can see it's not really that exciting. However, that little break of the downward trend line could be the start of a little bounce back in interest rates. Now let's take a look at the long-term picture. Here is your long-term upward trend line for, again, we'll call it interest rates. I know that this isn't an interest rate chart, but it represents it. And we've come back to the trend line. Remember I talked earlier when price runs away from the trend, it usually comes back, and now it looks like it's trying to bounce. So if it bounces and continues higher, that could be a catalyst for some short-term weakness in the market. If, however, this little bounce that we saw on Thursday is kind of a false signal, simply caused by a move down to that trend line, well, then we might roll over and break down. So what you want to watch for is, do we break the upward trend line? In that case, interest rates are probably going to go lower, and that'll allow the stock market to continue to strengthen. If, however, interest rates continue to rise, then I think we could have a catalyst for a bit of a pullback in stocks in the near term. All right, so my ratings then, US stocks neutral in the long term, bullish in the short term. Same thing for Canadian stocks, but there is a real catalyst around the corner where we could see that short term upward momentum change, so be careful in the short term. Gold, neutral long term, bullish short term. Oil, neutral on both time frames. The US dollar, still long term neutral. It's in a long-term upward trend, but it's still likely to pull back a little more in the near term, and bearish in the short term. We do have a little bit of downward momentum in the short term in the US dollar. Long-term outlook for Bitcoin remains bearish, but I've upgraded to neutral in the short term. And then interest rates neutral on both time frames, but that could go to bullish if we start to see a little bit more of a move up in the next few days. All right, now let's jump to the day trade of the week. And as I said at the top of the video, even though the market hasn't been doing great in the last, say, 5 to 6 months, in the last month and a half, stock market's been pretty good, and day trading's been pretty good. We're seeing every day 3 to 5 stocks that are in play, that are trading strong volume, trading abnormally. Those are the kind of stocks I love to trade. We highlight these in my active live service, where we've got some algorithms that look for buying pressure coming in, abnormal volume building very quickly. We spot these things within a couple of minutes of that starting, using something called my action candle indicator. You can learn more about that on the Stockscores website. So this week, for the day trade of the week, I think it was Wednesday or Thursday, NVTA was a real strong mover, and it gave a couple of entry points. There was what we call a pullback play here, and it's even hard to see because this stock went up so much, but there was a very strong pullback play signal there. But the one I want to talk about this week fits another strategy I have called a superhero. Now, the idea behind a superhero is it's stocks that are in play. They're trading abnormal volume. They're very strong liquidity, so they're trading very actively. There's a big crowd there. They're leading the pack in the market. There's just a handful of these stocks every day, but virtually every day there's some of them. And in this case, we're looking for a breakout from a predictive pattern. Where I've drawn that circle on the chart is a breakout from an ascending triangle. You can draw a line across the bottoms. That's the ascending part. Then you have a line of resistance, which creates the triangle. And you've got an action candle breaking out through resistance from low volatility, from optimism. That's a great setup, and you can see it went up really well. The economics of this trade, this is not GDRX, this is NVTA. For every $100 of risk, you would buy 400 shares. So if you want to take $1,000 of risk, you buy 4,000 shares. For $100 of risk, the capital is $1,584, but with day trading, you can leverage 3 to 1 and so that's $528 of capital. This thing really went ballistic into the close, hitting 19.7 times the risk amount, which 19.7 times 100 is $1,970 profit for capital required of $528. That's a phenomenal 373% return. I think it was the best trade of the week in terms of percentage gain that I found anyway. And lots of fun, obviously. So hope that you've enjoyed it. If so, please leave a comment, hit that like button. Where do you think the market's going to go? Do you think interest rates are going to start to rise again next week? We saw a little hint of that on Thursday last week. What are your thoughts about interest rates? Are we higher or lower on interest rates? I'd love to see your comments on that. Hope you've enjoyed it. Subscribe to the channel. Tell your friends to subscribe to the channel. And most importantly, trade well.